Before we start today's video, let me ask you something shocking. What if I told you that millions of Americans are overpaying hundreds, even thousands of dollars every single year? And the funniest part is, it's not because they're bad drivers. It's not because of inflation. It's simply because they still believe old, outdated car insurance myths that experts have already proven wrong. Some of these myths are so dangerous that they can destroy your claim, double your premium, and even make your policy completely useless when you actually need help. Today, we're exposing the biggest car insurance myths Americans still believe. And trust me, myth number 4 is the reason 37% of people unknowingly lose claims. And myth number 7, that one can literally double your premium overnight. So stay with me till the very end, because these myths, once exposed, will save you serious money. Welcome back to Insure Drive, the place where we break down the truth behind the insurance industry, expose hidden traps, and help you save thousands every single year. If you drive in the USA, this video is not optional. Because today, we're revealing myths that millions of drivers still follow blindly, even though experts and real data say something completely different. Let's start with the most popular myth of all time, the idea that red cars cost more to insure. You've heard this since childhood, but the truth is, insurance companies don't care about color at all. They only care about the car's model, engine size, safety rating, theft rate, and repair cost. Experts confirm that color has absolutely zero impact on your insurance premium. Another myth people still believe is that older drivers always pay more. Wrong. Age isn't the real factor. Risk is. Many companies actually offer huge discounts for older drivers with a clean history, low mileage, or advanced safety features in their car. A 55-year-old safe driver can easily pay less than a 25-year-old who drives aggressively. Then comes the myth almost everyone believes. Full coverage means everything is covered. It sounds logical, but it's completely false. Full coverage does not include loss of personal items, engine damage caused by wear and tear, rental car coverage, or gap insurance. Experts say the term full coverage is one of the most misleading phrases in the entire insurance world. Now, this one hurts the most. The myth that if an accident wasn't your fault, your premium won't increase. Unfortunately, that's not true. Insurance companies often raise rates even after not-at-fault accidents, especially if you've had multiple claims. Why? Because they label you as a higher-risk driver. This one myth alone causes millions of Americans to pay unnecessary premium increases. Another dangerous myth is thinking minimum liability coverage is enough. Most states require liability, but the required minimum is usually too low. One serious accident can leave you with tens of thousands of dollars in personal bills. That's why experts recommend higher limits, even if you think you'll never cause an accident. Then there's the myth that your credit score has nothing to do with insurance. In most U.S. states, that's simply false. Insurance companies use something called credit-based insurance scoring, and a poor score can raise your premium even if you've never had an accident in your life. Many people also believe that premiums only depend on how you drive. But reality is very different. Your zip code, the crime rate in your area, accident frequency, job type, annual mileage, all of these things can influence your rate. Experts often say where you live matters just as much as how you drive. One myth that shocks everyone is the belief that insurance companies automatically lower your rate if you drive safely. Nope. Safe driving helps, but most companies won't reduce your premium unless you actually ask for a discount. You have to request good driver discounts, bundle discounts, loyalty discounts, and low mileage discounts. Most Americans never ask, and lose hundreds every year. Another myth people fall for is that new cars always cost more to insure. Not always true. Newer cars often have better crash protection and advanced safety features, which can actually make them cheaper to insure than older models. And finally, the myth that your insurance company will always take care of you during a claim. Experts warn this is one of the most dangerous assumptions. Insurance companies are businesses, not charities. Their job is to minimize payouts, not maximize your comfort. Most rejected claims happen because drivers don't fully understand policy exclusions, deductibles, or reporting time limits. These myths don't just confuse people, they cost Americans billions every single year. But the moment you understand the truth, you take back control. You stop overpaying. You avoid dangerous mistakes, and you protect yourself the right way. If even one myth in this video surprised you, hit that subscribe button right now. Because every week on Insure Drive, we expose the hidden secrets of the insurance world and help you save money you didn't even know you were losing.